Personal Finance Guru G, spreading financial literacy. What are some common investment strategies, and how can you choose the right investments for your goals and risk tolerance? Investing is a crucial part of building wealth and achieving financial goals, but it can be overwhelming to choose the right investment strategies and products. In this article, we will discuss some common investment strategies and how to choose the right investments based on your goals and risk tolerance. 1. Passive investing. Passive investing involves investing in a diversified portfolio of low-cost index funds or exchange-traded funds, ETFs, that track a broad market index. This strategy aims to match the performance of the overall market rather than trying to beat it. It is a popular choice for investors who prefer a hands-off approach and want to minimize fees and expenses. 2. Active investing. Active investing involves actively managing your portfolio to beat the market. This strategy involves researching individual stocks, analyzing market trends, and making trades based on market conditions. It is a more hands-on approach that requires more time and effort but can potentially lead to higher returns. 3. Value investing. Value investing involves investing in stocks that are undervalued by the market based on fundamental analysis, such as earnings, dividends, and book value. This strategy aims to identify stocks that are trading at a discount and have the potential to increase in value over time. 4. Growth investing. Growth investing involves investing in stocks of companies that are expected to grow at a higher rate than the overall market. This strategy involves researching companies with strong growth potential and investing in them for the long term. 5. Income investing. Income investing involves investing in assets that generate a steady stream of income, such as bonds, dividend-paying stocks, and real estate investment trusts, REITs. This strategy aims to provide a regular stream of income to supplement other sources of income. When choosing the right investments for your goals and risk tolerance, it is important to consider several factors. First, consider your investment goals, such as short-term or long-term growth, income, or capital preservation. Second, assess your risk tolerance and choose investments that align with your risk profile. Third, diversify your portfolio to minimize risk by investing in different asset classes, sectors, and geographies. It is also important to consider fees and expenses, as they can eat into your investment returns over time. Look for investments with low fees and expenses, such as index funds and ETFs, to minimize costs. Finally, it is recommended to seek professional advice from a financial advisor who can help you choose the right investments based on your goals and risk tolerance. A financial advisor can provide personalized advice, help you create a diversified portfolio, and monitor your investments over time to ensure they remain aligned with your goals and risk profile. Please like, share and subscribe our channel.